this is my first trade breakdown of a long time, so I'm going to drop everything I use, teach you guys breakaway gaps, what I use inside of this to validate my trade up to second standard deviation, so we're going to go based off of that. So as you can see, I'm going to start from the higher time frame so you guys can have an understanding of what I was looking for. I'm going to remove these zones, but what I was looking for, we were inside of discount of the range, we ran into premium, we retraced lower. I also noticed that we had this 15-minute gap that we inversed, but we also ran into discount. So running into discount instead of the 1050 macro, we ran, what is it? Okay, stop distracting me. We ran into discount of the range into this IFEG. So we ran into this IFEG instead of discount and immediately reacted. So with this in mind, I wanted to see what we're looking like on the 5-minute. The 5-minute, I saw accumulation here, which I'm going to clear up the chart so you guys can see it easier. We have accumulation, then we had manipulation below the lows, and then I was looking for a distribution higher. And I used standard deviation to mark out my take profit, so I understood what I was looking for. So with this in mind, the accumulation, manipulation, distribution higher. So I trade macros now. Kind of a big jump from my previous trade breakdowns last year, but I saw this macro, we immediately ran lower, manipulating. So this macro was utilized for manipulation lower. And what did we run lower into? Well, you could see we ran into discount of the dealing range. We ran out this low right here. We had slight S&T with the bodies that wasn't validated, but we also ran into this new week opening gap right here and immediately reacted off of it. So we have internal liquidity right here inducing, so there's just a lot of inducement, running out this low into a new week opening gap, into the higher time frame inversion gap, plus a discount of the dealing range. So I'm looking for an immediate reaction higher. So now to get on with the entry, I'm going to talk about a concept I recently just came up with, I started talking about, and this is the double high probability inversion. And it was just this inversion gap, we pushed lower and we closed above it, and this is the only inversion we had. So I wanted to take my entry off of this inversion. And what made this extremely high probability, which this is like black sheep sauce, it was the volume imbalance between this gap. So whenever there is a volume imbalance between two PD arrays, I like to trade them, and I anticipate this for us to tap into it once and not tap into it. So failing to tap into it on NQ while we tapped into it on M and Q was just a clear SMT between PD arrays, making it an extremely high probability entry. And there were some also things that I know the students know that aligned with that. But with my stop loss management, I initially had my stop loss below this low because I wanted to see this turn into a breakaway gap. Now, breakaway gaps, I use them, as you see in the trade recording, I use them to manage my stop loss. So right here, after I got my entry, I saw the breakaway gap be formed. And what made this a breakaway gap? I've kind of systemized it to a point where it's really easy for me to understand. But for the breakaway gap, it's a gap with my entry in the way. So it's literally just a gap below my entry. So if we close above, creating a gap, and I get my fill, I consider the gap below it, because we're going to be reacting off my entry. I anticipate this to be a breakaway gap, which means we're not going to tap into it. So I like to manage breakaway gaps and move my stop loss within them. So I move my stop loss basically to break even, but at the breakaway gap with no fear because I was confident in my target. So my target wasn't the high, but it was the second standard deviation, 10 a.m. open. I want to see us run into the second standard deviation and reject lower. So based off this delivery, I marked out this inversion that we closed above, we reacted and respected it. So respecting this inversion is a clear sign that we are still bullish, and we formed another breakaway gap here. I try to anticipate every gap formed to be a breakaway gap because we have PD arrays in the way that we should be respecting and running off of rather than tapping into the breakaway gap itself. So with that in mind, we reject off of it and we form a high probability BISI. I consider this to be high probability because we're so close to the take profit. We already rejected off of an inversion gap, and this high probability BISI should bring us to our take profit, and this is exactly where I closed. And we almost got the top tick take profit. So this is just a whole breakdown, step by step, of everything that encouraged me to take the trade. Accumulation, manipulation into a very high probability key level with a very high probability PD array as well. So this fit almost all of our criteria for the entry, and our take profit was the second standard deviation. Now we had another entry here, which I'm also willing to break down because Baltic missed it. But is there any current questions right now? Also, Black Sheep, you guys are destroying the markets. Very good job getting this entry. And I know Romeo Bottom took the whole move right over here. But is there any questions about this 1050 trade in particular? If there's not, I'm going to move on to the next trade. And I'm going to give like a lower, less detailed breakdown of this one because I mainly just want to explain this one right here. But for this one, inside the macro, we have a run lower and we formed SMT here. So this SMT created multiple things, but same thing, IFEG here, SMT formed, and we also retraced into discount of the range. Now, why would I still be bullish? Well, this standard deviation is still in play. We ran into second standard deviation. We ran lower into OTE of the range. We rejected off of this breaker plus fair value gap, making it a unicorn. So all this logic here is completely disrupted. I don't care about it anymore. I'm focused on the retracement of the standard deviation. So we're running lower, we reject, we push up higher, and we come back down inside of the macro where we have engineered liquidity right before the macro opens. And inside of the macro, when we open, we immediately run lower to form SMT at the lows, manipulate lower in an area where I still want to see continued price higher. I'm still bullish because this is only retracement. I don't want to see this reverse. I still want to see us run into fourth standard deviation. This is still my target. So for this trade, I was busy recording so I couldn't take it. We have the IFEG, we close above the IFEG, and this is longs. And this is what this student took it off of, from what I can see. The IFEG here, closing above it, longing off of it. And this BISI right here, I'll explain one more concept. Another way to gauge order flow is when we see, oh yeah, it was entry off this CB actually. This is the proper entry, not this one. This CB right here is the first one that we have. This is the proper entry. But, oh wait, we need to include the volume imbalance. So yeah, when we close above this gap, let me just confirm. No, it's the whole gap, never mind, sorry about that. There is no thing here. Let me check if there's a volume imbalance here on NQ. No, there isn't, so that's not really the highest probability, but still high probability PD array. So we would have looked for the close above this gap, and this would have been our entry right here. And what we could see here, which I was planning on explaining this to the students, but I'll just drop it here because I feel like it. This CB was initially used to push lower, and we were showing that we were bearish off of this, but we ran up this low on YM, forming SMT. As you can see right here, SMT here, failure to run here. So we're still bullish, but this, you can see order flow is bearish, basically. But what happens when we form this BISI? When we form this BISI, we can see the BISI was respected, showing me, kind of signaling the price is changing state of delivery from bearish to bullish by respecting this bullish PD array. So we can anticipate this inversion to get inversed, and we can long off of it. So we can long off this inversion and target fourth standard deviation, and that would be my target for this trade. After running out this high, I would be break even. I was just a little bit too late. Otherwise, this is another setup I clearly would have taken. My stop loss would have been the low of this BISI, targeting the fourth standard deviation because we already got a retracement. So right now, this trade would currently be break even, but that's just me breaking down the trade. So is there any questions right now? If there's no questions, I am good. Oh, that's brutal. That's very brutal. That's sad. Finn, okay. Yeah, we mark out the gaps like this rather than just one singular gap. If there's two gaps within each other in a close range, a close proximity, and there's no wick, we use the whole gap. Just these two are it's one gap. I'm sorry that happened. Also, Baltic, the same thing happened to Baltic. Kind of going break even a little bit too quick, but the logic is there. You guys are doing good at spotting it, and I know you guys will succeed and you'll push even further. So no worries, you guys did everything good. Just like me, my live trading, I had no emotions. I strictly executed on my model based off what I saw and what I believed was high probability. And as long as I consistently do that every day, I know at the end of the month I'm going to have profits regardless. So I'm very happy. I'm very stoked to live trade every day. Thank you for watching the recap. See you guys on YouTube later.